Hey all, welcome back to another week of Market Monday with Stackers Recon. Let's start off with what is a stacker. A stacker is someone who buys and accumulates precious metals like gold, silver, copper, ammo, and accumulates them over a long period of time as a hedge against inflation and the financial system. And why do we accumulate precious metals like that? Because they are not only a commodity, but they are also a store of true value. So let's get into it. Gold on the February contract this week closed at $42.43, down $11.90 from a week ago. We are still up towards those 52-week highs of $44.33. Look how exponentially high that chart is right now compared to 2011 and the 1980s. The resistance on this gold chart is at $43.78, which was the same from a week ago, but if we were to close back above that, we could see the gold market go up towards that 4,800 area. A fun fact for the week is that the government currently prices the gold on their balance sheet at $42.22. That's right, $42, not $4,300, $42. And that price was set back in 1973, so imagine what would happen if the government repriced their gold at today's prices. Pretty crazy to think about. The silver market is still making new contract highs. The 52-week high for this week on the March contract was $59.90. We almost hit that $60 mark this week. But the market closed at $59.05, but that's still up $1.89 from a week ago. The silver is staying very strong and is in a bit of a breakout, as we've seen here for the last 2 weeks. It is still in this breakout. Now, getting into the gold and silver ratio for this week. Last week, the gold and silver ratio was at 74.59, and this week it's at 71.93. So it narrowed up just a little bit. The gold closed a little bit lower, and the silver a bit higher. Now, if you look at this chart, the last time we saw a spread at about 32 points was back in 2011. So we've got quite a ways to go if that is what is going to happen right now. And that projects the silver price out to about $96. I'm not buying much gold right now, but silver could still be a good buy. You're going to want to watch out for the basis, which is the over spot price that some of these gold companies are asking for on the silver, but it still has been relatively better than I've seen in years past. It's about $4 or $5 over the spot price right now. So if you're going to buy a little silver, now's not a bad area. It's still high, so don't go all out, but if you want to buy some, buy a little bit. Another interesting fact about what's going on in the silver market right now is not a lot of producers are putting silver into the COMEX, which could be a reason as to why the silver market continues to blow higher, because we don't know how much of the paper in the market is actually backed by silver. And so producers are nervous that if they put this silver into the market, they may not be able to get it back out. It may go to somewhere else, or if the COMEX gets halted or collapses, they may not be able to get it back, and then all they got is paper. So holding on to the silver seems to be more reliable than putting it into the market at this time and letting the market run. The COMEX shortage has been talked about for years and years. We saw it back in the COVID days, which wasn't that long ago, but everyone was talking about a run on silver because the COMEX didn't have as much silver as there was paper, and we don't really know what that looks like, but people are wary of it, and every time someone has to go to the market and stand delivery, which means someone is going to exchange their futures contract for the physical silver that it's supposed to be backing. It may or may not be there. We don't know. but a potential COMEX shortage is what producers are a little wary about right now. Copper on the March contract closed at $5.46, up 19 cents from a week ago. We're still riding those 52-week highs at $6.04. Lead closed at $19.78.35, down $15.08 from a week ago. Lead is just kind of hanging in there, right down towards the lows still. We're kind of seeing some support and consolidation in this area, but not really sure where we're heading next. Crude oil on the January contract closed at $60.08, up $1.53 from a week ago. We're just kind of riding right in the middle of this 52-week ranges on this oil. A lot of geopolitical events giving this oil the sideways chop we've been seeing, not seeing a lot of movement to the up or downside. But the upside right now on crude oil would be $61.59. If we break out above that area, we'd see $66.93, and the downside would be $53.87. That 53.87 area is a 62% retracement off the 2022 high in that crude oil, so we could see a lot of support there for a while. 30-year bonds closed at 115.19, or at a rate of 4.67. That's up 0.15% from a week ago. And I want to take a moment to talk about the inverse relationship we've seen here. This week the price went down, but the rates went up. So last week the rate was 4.52%, and this week the price of the bonds went down, and we saw a rate increase of 0.15% to 4.67. So when I talk about that inverse relationship between the price and the yield, that's what I'm talking about right there. So just a little bit of a change from a week ago, nothing major. Something I decided to add in this week are Bitcoin futures. So we're going to start talking a little bit about Bitcoin. The reason I decided to bring Bitcoin into the picture is because it has been called the digital gold of today. And a lot of people buy it. It is a potential good hedge. I own some. I still buy some. I buy little bits at pieces of a time, just kind of stack it up a little bit. We don't really know what Bitcoin is going to become, but we do know it's here to stay, and people are using it as a store of value or as a hedge against the monetary system. So it is a very good thing to keep an eye on. It closed this week at 89,600, down $1,465 from a week ago. The 52-week range on this Bitcoin is pretty wide. The low is 78,615 and a high of $128,585. So it's just kind of towards the lower end of this 52-week average. We've seen a pretty steep sell-off in the Bitcoin lately. It would be interesting to see what happens with Bitcoin. If the market crashes, we could see people sell a lot of Bitcoin because they will need some cash, or we could see Bitcoin go higher, but we'll keep an eye on it. Ammunition for this week: 9mm 124 grain FMJ ammo closed at 25 cents. That's up about 2 cents from a week ago, with a range of still 20 to 35 cents. 5.56 62 grain ammo, we saw it steady from a week ago at 46 cents with a range of 40 to 65 cents. This is high quality ball ammo, not white box ammo or range ammo where you see 19, 15 cents around. This is higher quality ball ammo, something you would see the military buy. So that's where these prices are coming from when I accumulate these prices. There's an average of what I see on the market across several retailers for the higher end brands of ammo. The last thing I want to leave you guys with is a chart that shows the FINRA debt margin with an overlay of the S&P 500. As you can see, they're very closely correlated, almost to a T, which shows that every time the government prints money, the S&P goes higher. So how much true value is in the stock market? Because what this chart is showing is that the stock market is a function of debt, of printing money. And so where is the true value in the stock market? We know there is some value. There's value in some of these companies and what they're doing. But the fact that the stock market is a function of printing money doesn't show much true value like precious metals does. And that's why we stack gold and silver. If you were to buy gold back in the early 2000s, you'd have over 1,000% return as compared to the stock market. And that 1,000% return is true store value. True value. It's real money. Unlike the stock market, which is just print money when we need it, and the stock market goes up. So all your money really does in the stock market is keep up with inflation. It's crazy to think about. It's almost an illusion of making money. That's it for this week. We'll stay tuned and see how it goes.